Ever wondered how long it would take to double your investment? What if there was a simple mathematical rule to help you estimate that? I'm sure you've heard of the magic of compound interest, but have you heard about the rule of 72? It's a quick, clever trick that investors use to calculate how long it'll take for an investment to double. Intriguing, isn't it? Yes, you heard it right. It's called the Rule of 72. Let's dive in, shall we? The Rule of 72 is a straightforward way used in finance to quickly estimate the doubling time of an investment. Now you might be wondering, why 72? Well, it's not just a random number pulled out of thin air, it's a simplified version of a more complex logarithmic calculation. But don't worry, there's no need to dust off your high school math textbooks. The beauty of the Rule of 72 lies in its simplicity. Let's break it down. The Rule of 72 is a method that estimates the number of years required to double your money at a given annual rate of return. The formula is simple. You divide the number 72 by your expected rate of return. For example, if you're expecting an annual return of 6%, you would divide 72 by 6. The result? 12. This means at a 6% return, you can expect your investment to double in approximately 12 years. Remember, this rule gives a rough estimate and doesn't account for factors like inflation or changes in the interest rate. But it's a handy tool to have in your investor's toolkit, especially when you need a quick and easy way to understand the potential of your investment. So if you want to know approximately how many years it will take for your investment to double, just divide 72 by your expected annual rate of return. For instance, if your investment has an annual interest rate of 6%, how long will it take to double? Well, the Rule of 72 gives us a swift and straightforward answer. Simply divide 72 by the interest rate, in this case, 6. The result is 12. Thus, it would take approximately 12 years for your investment to double. Now, let's consider another example. Suppose you have an investment that earns an annual interest rate of 9%. Apply the Rule of 72 again, and you'll find it takes approximately 8 years for your investment to double. For an even quicker return, consider an investment with an annual interest rate of 12%. With the Rule of 72, you'll find it takes about 6 years for your investment to double. But what if the interest rate is a bit trickier, like 7%? No problem. The Rule of 72 still applies. 72 divided by 7 gives us a little over 10 years for that investment to double. These examples demonstrate the flexibility and simplicity of the Rule of 72. It's a quick mathematical tool that can help you estimate how long it will take for your investments to double, based on the annual interest rate. Regardless of the rate, the Rule of 72 is your back-of-the-envelope calculation for understanding your investment's potential. As you can see, the Rule of 72 gives you a quick ballpark estimate of when your investment will double. The Rule of 72 is a powerful tool for investors, but it's important to remember a few things. Firstly, the Rule of 72 is an approximation. It's a quick and easy way to calculate the time it takes for an investment to double, but it's not exact. It's a ballpark figure to help you understand the potential of your investments. Secondly, the Rule of 72 works best for interest rates between 6% and 10%. Outside of this range, the rule becomes less accurate. So if your investment has a 15% return, you might want to use a more precise calculation method. Thirdly, the Rule of 72 assumes a fixed annual return. It doesn't account for market fluctuations or changes in interest rates over time. If your investment's return rate changes, the time it takes for your investment to double will change too. Also, remember that the Rule of 72 doesn't take into account the effect of taxes or fees on your investment. These factors can significantly impact your returns and the time it takes for your investment to double. Finally, keep in mind that investing always comes with risks. The Rule of 72 gives you an estimate, but it doesn't guarantee results. Always do your research. Consider your risk tolerance and make informed decisions. So, next time you're wondering about your investment's doubling time, remember the Rule of 72. It's quick, it's easy, and it gives you a good estimate. Happy investing!